Hello traders, welcome back to my channel. I remain your humble host Leonard and you're watching Leonard FX. Yeah, for those of you that watched my previous video, you discovered that probably I've changed the name of this channel, Leonard FX Junior Traders Club. Yeah, that is me trying to fulfill my dream of putting out content here for free, most especially for beginners. Starting out, it was very difficult for me acquiring paid mentorship. So I made a promise myself that once I finally get this thing right, I am going to be putting out everything I know about Forex out there for free, especially for beginners. So after so many thoughts, the idea of Junior Traders Club dropped in my mind and couldn't hesitate. I had to change it to that. Maybe in the future I might probably open another channel for myself. So yeah, that aside, so today's video will mark the beginning of a Forex Traders course, beginner course. And the course is going to be divided into 3 sections. The first section will be Forex basic training. The first session will be Forex basic training, where I'm going to be using a book titled Forex Basic Knowledge, written by a South African guy. So the book is going to serve as a guide for me as I take you on this series, on this first section. And the second section will be where I'm going to take you guys to the live market. Here is where I'm going to break down the charts and show you things that you need to know before embarking on your forex trading journey. And on the third section will be where I'm going to personally teach you my own strategy. Yes, the strategy I use to navigate to make money in the market. And believe me guys, when I tell you that after this course you don't need any other mentorship. Yes, if you can be serious and take action, you don't need another mentorship, guys. You don't need it. In fact, what I'm going to be giving you here will be far better than so many paid mentorship classes out there, believe me, because I've been there and plus my 2 years plus experience in this market. So guys, without wasting so much of your time, let's get into the video. Let's go there. So guys, this will be the first section of this beginner to mastery forex trading course. Yes, like I said, we are going to be making use of this book titled Forex Basic Training during this first section, so that you get to know what the basics or the rudiments of forex trading. Yeah, forex trading. So guys, sometimes we tend to skip these parts, but believe me when I say it's very important. In fact, myself, after getting a premium course which teaches about strategy, I still went ahead and get this particular book because I needed some basic knowledge for trading. So guys, believe me, to get some points in this journey, in this trading thing, that you will see the need was to know these stuff. So if I were you, pay attention, get my jotter close to me, and be serious with this. Yes, every part of this journey is very important, so never skip any part. So guys, yeah, and another thing I want to say is that don't joke with this course, guys. Don't take it as, oh, it's free. This is me basically giving you everything I know. I've been into paid mentorship and I've experienced many mentors, and so guys, many of them don't talk about this basic stuff, and I see the need to come here and teach you. And so I want you to take this course very, very serious. Don't see it as, oh, it's probably free, and I know many of us are not usually cool with free stuff, but guys, believe me when I say that this is me telling you everything I know. I'm not going to hide anything. Now, I've made a promise to myself that once I become profitable, I'm going to give this information out for free, especially to those that don't have the money to go to buy mentorship. Sometimes some of this money we spend on mentorship can be used to start our trading journey. Yes, can be used to start our trading journey. So this is me basically giving you free course on forex trading. Don't see it as, oh, it's not. You don't need any mentorship, guys. If you can pay attention here and take action, you can pay attention and take action, guys. You don't need any other mentorship. There's nothing different from what you are going to be taught out there. All the certificates they give you in some of those physical mentorship classes and even online, this is basically what you are being taught. There's nothing different. So guys, stick with me, be attentive, be serious, get your jotters close, and believe me, after this course, you are going to find your way around forex trading easy peasy without having to spend money on any form of mentorship. So let's get right into the video. Like you are seeing, you're already seeing what is up before your screen, guys. Forex basic training. Forex basic training. We want to start off by what? By defining what forex actually means. Yes, forex stands for what? Foreign exchange. Oh, I forgot to mention that this book is actually this isn't my writing, guys. This book is written by a South African guy. So I can Napon Rebeto Mpopen. I pronounce the name right, guys. I'm a Nigerian, so I don't really know much about South Africans. But guys, I find this book so interesting, and I brought it out so that it will be as a guide, so that as you are reading, as we are both, you actually be reading it while I'm reading, and then I'm explaining it. I believe this will be the easiest way we can learn this together. Yes, that is why I decided to use this free and wonderful book. So shout out to Riabetso Mpopen. Yes, aka Rian. You can see his Instagram handle. So guys, you can go and follow him, show him some support and love. So that's that about that. Just a disclaimer about the resources we are going to be using. So guys, we want to look at the first part. We want to look at what Forex actually stands for. Forex stands for foreign exchange, like you see it on your screen already, which is exchanging of one currency for another. That is just the simple definition of forex. In forex, we have two different abbreviated words, which is what? The FOR, and the word the EX. Yes, so stand for what? Foreign. Why the X stand for what? Exchange. Highlighted here, exchange. So forex is what? Foreign exchange. That is the basic meaning of forex. Foreign exchange, which is exchanging one currency for the other. You sell one currency and buy another currency simultaneously, and once you do so, you have essentially involved yourself in forex market. Let's look at this beautiful example before I explain. We have a beautiful example here. The United States dollar, which is what? USD against the South African rand, which is ZAR. The United States dollar against the South African rand, which is the official currency of South Africa, and that of what? The United States of America. So when you go to USA, you have to exchange or sell the ZAR, which is the South African rand, and buy the USD, which is the United States dollar, in order for you to make transaction in USA. As simple as that. So whether you know it or not, once you are exchanging one currency to the other, you have involved yourself in forex trading. That is just the basic knowledge, guys. There's nothing. That is basically what we are doing in the markets. So you can see here that this is real life scenario inside computer, happening in computers. Yes, happening in computer and a chart. So the chart is actually the interpretation of what is really happening. Is actually what explains why the currency you are exchanging to the other is actually at the rates at which you are getting it. So the charts is what is the correct interpretation of what is really happening in the real life. So guys, once you do what if probably you are in South Africa, you are going to the United States. Of course, you agree with me that they don't spend the South African rand in US. They don't spend that. Just like where I am in Nigeria, the official currency recognized here is the naira. We don't have another. In fact, in some cases, I have heard of where there are some people spending dollars and in this country. So the officially recognized currency is the naira. So also in the United States of America, the officially recognized currency is the US dollar. So if a South African citizen and you are going to United States of America, before you can do any, you can involve yourself in any form of buying and selling, you must or services, you must first of all get the United States dollar, which means that if you are going there with your South African rand, because obviously South Africa only deals with their currency, so you cannot be traveling from South Africa to US with US dollar. So it is ideal that when you get to United States, you exchange your rand, your South African rand, with what? With the US dollar. So once you have done that, probably when you get there, you get to the bank or you meet local currency changers like here. You have involved yourself in Forex exchange. That's basically what is Forex in the real life scenario. So, but guys, the best way to involve yourself in Forex trading is actually interpreting the charts. I'm giving you a secret. So this is how the big boys make money, because they are the ones that really understand what is happening to the currencies. So, and once they make decisions based on that, they make a lot of money. So that is it, guys. That is basically it. I know some people here in my country, Nigeria, that usually get some hard because we have some neighboring countries like Benin and the rest. So some of them, when they see that these currencies, that our currency is becoming weaker, they do what? Some of these, there are some people that do buy stuff from, import stuff from there. They do what? They gather they gather, because they don't understand the trading at the computer aspect of this thing. So they do it locally by what? By gathering a lot of Benin currencies. The hard currency, the hard paper. They store it and keep it somewhere. So when they see that this currency have risen, they will not go and exchange it, and in return they make a lot of profit. So guys, that is just the simple meaning and definition of Forex trading. That is just the simple definition of Forex trading. Yes, selling of one currency, selling or buying of one currency to the other to another in order to make profits. Yes. So we have the time. We want to look at what are the times we can trade, what time we can trade the Forex market. Like you already see your screen, guys, Forex is traded 24 hours every day, 5 days in a row in a week, and then depending on which time you are trading, it has different section, and depending on your country, you can make monitoring each of these sections anytime, anywhere, any moment of the day. Yes, so the Forex market is open 24 hours, 5 days in a row, 5 days in a week rather, has different sections depending on what time it is. So we have the London section, which usually starts in my own country around 9 a.m. and runs till 6 p.m. That is here in Nigeria. Yes, we are very lucky here in Nigeria because basically most of the volatile section in the market usually happen during our own days here. Yes, during our own days. 9 a.m. in the morning till 6 p.m. Very beautiful. Like during days, the New York session as well starts by 4 till 9 p.m. If you look at this time span, like what I've written here, look at what is here, guys. I've written the times here. I think this will be 6 p.m. not 6 a.m. p.m. So if you look at this beautiful time here, these two different times, you see that there is a time lapse. There's a time lapse, and those time lapse are what? You see 4 p.m., 4 p.m., 5 p.m. and 6 p.m. 6 p.m. 4, 5 and 6 p.m. So these 3 hours are usually considered the most volatile section in the Forex market. But guys, this is when the market moves the most. Why? Because London and New York lapse, and these two sections are considered as the most volatile section in this market. It's more volatile. London section is more volatile than Sydney and Tokyo or Asian section. Even the both combined, one of these is more volatile than them. London section is more volatile than this combined. New York is more volatile than two of them combined. So imagine when these two volatile section time lapse, like this is when the London section are in their trading, in their daily business activities. There is buying and selling going on. The banks are busy, governments are busy making decisions, and all those things are happening. the economy is either going up or coming down. When those activities are taking place, London and New York, they have this time frame, this 3 time frame lapsing. Guys, there's usually a lot of movement in markets. This is when the big boys make a lot of money. So make sure to have those 3 times in mind. Put it somewhere in your jotter. Okay, this is the most volatile session in this market. Some people believe that during London session money, that there are usually manipulation during the London session. The markets great liquidity during this session, and when this 3 time frame lapse, that was when what usually have the market go in the true direction, whether up, going up or coming down. Yes, people believe that, but that is up to them. I don't. So depending on your trading style. Yeah, that is that about that, guys. And then we have what the Sydney session, which usually start from 10 p.m. Nigeria time till 7 a.m. Nigeria time. I don't really pay much attention to that time because, guys, 10 p.m. is bedtime. I go to sleep, and I make a lot of money during the 2 session. To be very greedy for you to come here and be wasting your time, because this time is when the market is usually slowest. So I don't really pay attention to those times. And we have Asia or the Tokyo session is much more volatile than the Sydney session. So that time runs from 1 a.m. Nigeria time, which is in the midnight, till 10 a.m. Nigeria time, which is our early morning here. So I don't really pay much attention to those times. Like I said, times are trades during London and New York session. And guys, sometimes I do take trade on Asian session, yes, early in the morning or even in the night. Depends, because I'm a swing trader, so sometimes I just see my signal there, take it. Like the last trader to contribute JPY, like in those currencies that falls on this session. Like when they say Tokyo session consists of the Asian countries. You can see we have Tokyo/Asia. So it's like Tokyo, which is the capital of Japan, like the center of what trading activities. It's like the hub of trading activities in the Asian session, so which is why it's actually named, which is actually the why that session is called the Tokyo or the Asian session. So the Tokyo session consists of all the countries that falls under Asia, that their currencies are tradable in the market, like the Japanese yen and the Chinese yuan and so many other countries that are under this Tokyo session. So like the GBP JPY I mentioned earlier, trade that took last week, it was very beautiful for the sell trade, and I took this trade during the Asian session. Yes, I woke up that night because I was monitoring it. Woke up that night and I see that that dropped a beautiful double top and the testing of the neckline. What I did, quickly place my trade, and guys, it was beautiful. If you go check the chart now, very bearish, but I'm out already. So guys, like I said, like we were saying, the London session actually consists of the Britain, the British countries. Yes, the British countries, London, and suburbs. But the only currency I trade on this session, guys, is GBP, which is the British pounds. Yes, and have the New York session, guys. And many of you I don't need to lecture on this session already. Great United States. This is when there is trading activities in the US. And guys, this is when a lot of money is being made in this market because it's usually very volatile. The US, salute them. US dollar usually does well during this time, and it remains the center of commerce in the world. So that is that. All the Western countries, they fall on the New York section. But the most important currency in this section is the US dollar, and the most important currency in the Asian section is GBP JPY. Yes, is the JPY rather, which is a Japanese yen JPY. London session we have the British pounds GBP, and New York session we have the United States dollar. Those are the most important pairs in this. And guys, all the currencies are traded, either they contain JPY, the GBP or the US. That is the only currency I trade, because these currencies tend to move much. So guys, you have done so much on the sections. We want to move to Forex. So we can see here that this book that Forex is the most liquid financial market with a daily turnover of more than 5 trillion. It's very liquid, guys. I was discussing with someone here in one of our local markets, but the market is usually very populated and like one of the most busiest markets in my state here in Nigeria. So I was discussing with the guy was like, this market is very large, it attracts foreigners and a lot of people to this area. I said yes. He was not like trying to compare it with what the forex market. I told him, guy, go and sit down. You don't know what you're saying. That the forex market is not even comparable to any market in the whole world. It's the number one most liquid market. Like money is being pumped into this market, guys. A lot of money. A lot of money. Banks are being crazy. I don't know how to explain it. But guys, take it from me. Forex market is the most liquid market in the whole world. I'm not even the one saying it. It's all over the internet, all over books. So why to trade? So you can see it here. We have other markets. We have the Tokyo, London, and then Forex. We have the stock market, and then we have the Forex market. Stock market is not even anywhere around close to the Forex market. Look at $5 trillion. Crazy, guys. $1 trillion. Look at the way it's standing tall like a tree. It's actually very large market. Currencies are always quoted in pairs such as USD ZAR, where you buy one currency and sell another simultaneously. So currencies are quoted in pairs. Yes, it's either you are selling or you are buying, and these two things happen simultaneously, like it's being stated here, guys. It happens simultaneously in the sense that probably you deposited your US dollar into your Exness account, you deposited US dollar into your Exness account, and this time you are having US dollar in your Exness account. Now you see that the US dollar is becoming weak against the ZAR, which is the South African rand. You see that the US dollar is becoming weak, probably based on economic news, government activities, or purely based on what the movements on the charts or historical price movement. You see that the United States dollar is becoming weak, and you want to get your rand, you want to get rand and hold it because that you perceive that okay, the rand is going to strengthen. You do what? As you are selling your US dollar, you are buying the rand, you are also selling US dollar. That is why they said it happens simultaneously. You are with your rand, you are with your US dollar. Now you are dropping it, saying, okay, now I want to buy rand. As you are buying rand, what is happening to your dollar? You are selling it. So that is it, guys. So let's go further. We have example here, which is US dollar against rand, as I have said. And then we have what is called the base currency and the quote currency. The base currency is the US dollar. Yes, as you can see, the first currency in the pair is US dollar. So the quote currency is usually what? The second currency in the pair, whatever pair you are trading. So in this case, US dollar is the base currency. US dollar, in this case, look at it here, guys. It's not responding well. So US dollar in this case is the base currency, while the South African rand is what? The quote currency. Yes, we want to look at some terminologies, which is going to be the last part of this series, guys. Continue in our next video. So we want to look at terminology, some basic terminologies in forex trading. Like we have said earlier, base currency. The base currency is the basis for buy or the sell. The basis for the buys or the sell. Yes, base currency is the basis for the buys or the sell. And then we also have EG. We have EG. If you buy US dollar, this simply means that you are buying the base currency and simultaneously selling the quote currency. I don't know if you are getting the simultaneous part, guys. Getting simultaneous part. You are buying in the foreign market. Let's use the physical life example. Yes, like you are having rand, South African rand, and you are in US. You want to get the US dollar. What happened? You are giving your dollar to the bank, your rand to the bank. That means you are selling it to them. Why they give you back the US dollar? It means that as you are doing this one, the other one is also happening, following simultaneously. You are doing this one, the other one is following. That is it. It's either you are buying, if you are buying the base currency, you are automatically selling the old currency. If you are buying the old currency, you're automatically selling the base currency. That is that about that. Then we have the cold currency as well. The cold currency is the second currency in any currency pair. We also have long or bullish, which is the second terminology we are going to consider. Remember, I said we are considering terminologies. We have base currency is the first terminology. Second terminology is cold currency, and the third one is what? Long or bullish. Yes, these are terms in trading. When they say long, when they say long, they are basically telling you to buy the market, buy that particular currency. Yes, in traders talk, in traders talk, going long, in traders talk, going long or bullish means buy. Simple as that, guys. Shorts or bearish. In traders talk, going short or bearish means sell. So long, some people usually use it, some mentorship or in some groups, they prefer to use it as long. It makes a lot of sense. That is the terminology in trading. So when you hear long, don't be confused. They actually tell you to buy. When you see a short, they actually short this market. They actually tell you to sell the base currency. So we have other terminologies, which is what? PIP. PIP or percentage in points. That is the meaning of PIP, guys. Percentage in points. A PIP is the smallest price movement available in the currency. The smallest price movement. I want to show us an example. Okay, let's go through this first before I open the live chat and show us an example. So we have here the fourth decimal number, e.g. USD, which is this 9. Fourth decimal number. We have first decimal, second decimal, third decimal, fourth decimal in red. The one in red, guys, the one in red is what? Is the fourth decimal number, e.g. in US dollar against ZAR, is 9. If US dollar against South African dollar moves from 13.3979 to 13.3980, we have, that is called a 1 pip move. That is what? A 1 pip move. We also this pip actually help you to measure what? Profit or loss says. That is the basis of measuring what? Your profit or your loss. We want to look at another example before we go to the last chart. Another instance is USD JPY. When we have the United States dollar against JPY move from 100.509. We have 100.509. From, as you can see here, guys, the currencies all have different decimal points. Yes, some currencies have 9, some have 2, some have 4, some have 5, some have 3, depending on how powerful the currency is. I think how volatile it is or how powerful it is. Yes, that's what determines the number of decimals. Like some Forex, some pairs like US dollar against gold, I think it have 2 points or so. But these guys are very powerful, guys. So I think it depends on the strength of the currencies. We have lot size as well. Just lot size is the value used to determine profit or loss. Yes, standard lot size is 1. So each single pip move using one standard lot is $10. So if you are placing your trade using 1 pip standard lots, you are going to be either making or losing $10 in each pip move. So that is that. And we have mini lots size, which is 0.10. So every broker has this, guys. So don't be confused. In every broker, they basically use, except you are using nano lots, or probably you are trading what do they call it? That you have something more than this. Yes, but as long as you are using the normal lot size in every broker, it is either 1. It is having what? 2 decimal places, 10, and it's having 1, 2 two decimal places. So it's either you are using standard lot size or you are using the mini sizes or micro sizes. So the mini size is every single pip move you are making or losing $1. And in micro lot size, which is 0.01, is 10 cents per each pip move. Yes, per each pip move. So we have type of orders. Type of orders is still under market terminologies. Type of orders. A market order is an order to buy or sell at the current market price. Yes. Market order is the order to either buy or sell at the current market price. So we also have buy. Okay. We also have take profits. Rather, take profits, the level where you decide to exit a trade with profit. Take profit is a level you decide to exit a trade with profit. Why stop loss is that okay, this market once if this market decide to go opposite my prediction, opposite my direction or my bias, this is a point that when you get there, that means I'm completely wrong. Take me out. So, guys, I think we are going to stop here because of our time. Next time we come again. In my next video, we are going to start from what type of trading. And guys, I promise that next video we are going to be a bit quicker. This is just first time, and I think I've taken a lot of time. For the next video, I want you to go and study about type of trading and other stuffs like technical analysis, price action, and all of that. So that when I come, it'll be like a summary. So guys, if you need this particular book, DM me. My WhatsApp number is on the description of this video. DM me. I'll be happy to send the book to you straight. And even other trading books, I have a lot of them in my possession, guys. So thank you for watching and expect the next video expect the next episode next week, Tuesday. So thank you guys for your ears and peace out.